Hello everyone, it's K-Ape. The US stock market showed a generally positive tone today. Let's start with a quick look at the major indices. While the Russell 2000 closed lower, the S&P 500, the Nasdaq, and the Dow Jones, they all finished in the green. The market picture is still crystal clear. We're in a big tech-dominated world. Semiconductor stocks, led by Nvidia, performed strong across the board. Google and Amazon posted gains, while Oracle was a bit sluggish today. Bottom line? Large cap tech is outperforming small caps, and AI plus cloud sectors are leading, while cyclical stocks just lag behind. That trend didn't change much today. The biggest event today was hands down the US GDP report. The advance estimate for Q3 came in at a staggering 4.3%. That blew past Wall Street's consensus of 3.3%. Just looking at the headline, you'd think the US economy is exceptionally strong. It's pretty rare for an economy this massive to grow over 4% annualized. But we have to look deeper than the raw number. GDP breaks down into four main parts: consumption, investment, government spending, and net exports. In this report, consumption added 2.39 points, net exports chipped in 1.59 points, and government spending contributed 0.39 points. Investment, though, it actually subtracted growth, with a negative 0.02 contribution. That's got investors asking, if we're in the middle of this massive AI investment boom, why is investment negative? We all know AI data centers, semiconductors, and cloud infrastructure investments are exploding. So there's a specific reason why the investment figure stayed negative. The category includes equipment, intangible assets, and private inventory investment. This quarter, private inventory investment dropped sharply. Businesses decided not to stockpile goods. Two ways to read this. First, imports fell because of US tariff policies. Second, it hints that the underlying economy, outside of AI, is weaker than many think. So how should we interpret this 4.3% growth? On the surface, it's strong, but it's not evenly spread. It's more of a carry by big tech and high-income earners. Declining inventories dragging investment negative tells us the real economy beyond AI is still fragile. We see the same story in consumption. The top 20% are holding things up thanks to the wealth effect from rising assets, but consumer confidence keeps dropping. Everyday people are feeling the cool down. Because of this, we can't just assume strong GDP means no more rate cuts. As long as inflation heads toward the 2% target, the Fed has room to keep cutting. The market's already pricing that in. That's why we're seeing surges in physical assets like gold, silver, platinum, and natural gas. Investors are betting on lower rates even with inflation a bit sticky. Bottom line, the GDP number is strong, but it's not a balanced expansion. And markets, they're already looking ahead to rate cuts, while positioning for inflation hedges. Finally, let's wrap up with some key news in the AI and semiconductor space. First, Nvidia is aiming to resume shipments of its H200 AI chips to China by mid-February next year. They're in talks for about 5,000 to 10,000 modules from existing inventory, but timing depends on US and Chinese approvals. Second, ByteDance, TikTok's parent, is planning a massive 160 billion yuan investment in AI for 2026. That's roughly $24 billion US. Over half of that budget goes to securing AI semiconductors. They've reportedly placed a trial order for 20,000 Nvidia H200 chips. Approval is still a variable, but Chinese big tech's commitment to AI, it's rock solid. Third, new analysis shows OpenAI's computing margins jumped from 52% last year to 70% this year. That means they're nailing model efficiency, optimizing infrastructure, and growing paid services, all at once. It's a clear sign the AI industry is shifting from heavy losses to a profitable model. Conclusion. To sum up today's market, it looks like a strong rally fueled by the GDP surprise on the surface. But under the hood, we've got a K-shaped economy and structural imbalances. This is an environment where AI, big tech, and physical assets are all heading up together. Market opens soon. I think I'm jumping in on something. All my live trades go up around 8 to 9 a.m. Eastern in the community tab. Thank you for watching today. Smash like and subscribe. I'll see you in the next video. Take care. K-Ape out.